Welcome to The Explainer. Today, we're breaking down a historic, totally structural transformation that's completely rewiring the global semiconductor industry. Now, if you've been watching tech lately, you know things are moving at absolutely breakneck speed. But, beneath the surface of all this flashy AI hype, there's a fascinating and honestly highly constrained hardware reality that we need to talk about. So, let's dive right into this staggering forecast for 2026. According to the World Semiconductor Trade Statistics, we're looking at a record-shattering $1.51 trillion global market. Think about that for a second. And what's driving this massive 90% year-over-year growth? Well, it's a breathtaking 250% surge in memory chips, which are projected to blow right past $800 billion all on their own. It is just astronomical. All right, here's our roadmap for today. We'll quickly run through the trillion-dollar AI supercycle, the great memory shortage, the giants and innovators racing to meet demand, the impact on stock prices, and finally, we'll look at when this massive shortage might actually come to an end. Okay, let's jump straight into Section 1, the trillion-dollar AI supercycle, and what we're calling a stark structural divergence. We're obviously seeing this massive macro-level boom, but all this record revenue is kind of masking a really fundamental split in the industry. Get this, high-value AI chips are now generating roughly half of total industry revenue. Half. Yet, incredibly, they make up less than 0.2% of the actual physical chips being produced worldwide. So, while AI infrastructure is absolutely exploding, your standard computers and smartphones are actually seeing much slower growth. It's wild. Moving right along to Section 2, the great memory shortage, the engine and the fuel. You can basically think of this entire bottleneck like an engine and its fuel. AI GPUs, right, those are the engines, but high bandwidth memory is the essential fuel that makes them run. And the massive traffic jam happening between them? That's called CoWoS. It's TSMC's advanced packaging technology that literally bonds the AI processor to the memory. The crazy part is, global CoWoS capacity is completely sold out for 2026. It's literally the industry's ultimate choke point right now. And because manufacturers are dedicating almost all their factories to creating this AI fuel, we're seeing this crazy phenomenon called Memflation. Fabs are obviously prioritizing high-margin AI memory over standard consumer chips. And the result? Prices for everyday DDR4 and DDR5 memory have literally spiked by 4x. That means upgrading your PC, buying a new smartphone, or even just getting a new car is going to cost you noticeably more. All right, Section 3, Giants and Emerging Innovators. Let's look at who is racing to meet this insane demand. So right now, the absolute top of the market is incredibly consolidated. You've got NVIDIA pulling in over $125 billion in projected 2025 revenue by completely dominating the AI GPU space. Right alongside them is TSMC, holding immense pricing power, basically acting as an advanced foundry monopolist. And then, controlling the incredibly vital memory supply, you have a highly profitable oligopoly run by Samsung and SK Hynix. But whenever there's a monopoly, there's startups racing to break it. We're seeing a huge wave of heavily funded venture-backed innovators. Companies like Cerebras have raised a cool $1 billion for their wafer-scale engine, Manioc secured $500 million for specialized LLM chips, and Rebellions raised $400 million for their advanced chiplet architectures. They're all out there building custom hardware specifically designed to bypass these traditional supply constraints. It's a true David and Goliath situation. Which brings us to Section 4, stock prices and market impact, and the real fragility of these tech valuations. Real quick, before we look at the hard numbers, just a friendly reminder, this explainer is strictly for educational purposes. We're purely looking at historical and forecasted data to understand the mechanics of the industry, so please do not take any of this as financial or investment advice, okay? Okay. So these sky-high tech valuations actually make the sector incredibly fragile. To understand just how extremely sensitive this market is, look at what happened in early June 2026. A single, just slightly disappointing AI sales outlook from Broadcom managed to erase $1.3 trillion in value from the chip index in just 2 trading days. Let me repeat that. $1.3 trillion vanished. Poof. When you look at that specific sell-off on June 5th, the volatility was just brutal. Marvell plummeted 17%, memory giant Micron tumbled 13%, and Intel dropped over 11%. It absolutely proves how tightly wound this whole market is right now. Honestly, the slightest hint that AI spending might slow down or that capacity constraints are delaying deliveries can trigger a massive, immediate repricing across the board. And that leads us to Section 5. When will normalization arrive? Let's map out the end of this shortage.
This is the trillion-dollar question for everyone, from enterprise data centers down to a casual consumer just trying to upgrade a PC. When does this structural memory shortage actually end? Well, analysts are deeply divided. Unlike previous supply chain crunches we saw during the pandemic, you can't just fix this with a software update. Actually, resolving this bottleneck requires years of physical construction. We're talking pouring millions of tons of concrete for new fabs and massively expanding advanced packaging facilities.
So we're looking at three distinct scenarios here. The upside scenario predicts some relief by Q4 2027, and that's if we see rapid yield improvements in memory production. The base case targets 2028, because that's when those massive new domestic facilities funded by the US CHIPS Act finally hit mass production. But then there's the downside scenario, which stretches all the way out to 2029 or 2030. That could definitely happen if the transition to next-generation memory faces severe manufacturing delays. And to really ground these timelines in reality, some top executives are honestly pretty pessimistic. Intel's CEO, Lip-Bu Tan, famously stated at a recent summit that there will be, quote, no relief until 2028. It's a stark warning. It means supply growth, no matter how many billions of dollars are thrown at it, simply cannot catch up to the sheer physical pace of AI demand in the short term. Because this constraint window is measured in years, not just a few months, tech companies are radically adapting just to survive. They're totally abandoning lean, just-in-time logistics and shifting to just-in-case buffer inventories. They're actively securing long-term supply agreements well beyond 2027 just to lock in capacity. And they're investing heavily in technical standardization so they aren't held hostage by any single constrained vendor. I want to leave you with one final thought today. As data center spending rockets toward the multi-trillions and these physical constraints persist, the race for silicon sovereignty is literally only just beginning. If AI demand continues to outrun even the most aggressive 2030 factory expansions, who will ultimately control the global economy's most critical bottleneck? Thanks so much for joining me on this explainer, and I'll catch you next time.